Wisdom is useless without structure. And in trading, structure isn't routine, it's armor. Livermore understood that success wasn't about brilliance. It was about building habits that protect you from yourself. The market doesn't destroy your capital. It destroys your discipline. Comment hook. Be honest. Which part of your process breaks down first during a bad streak? Your plan, your patience, or your emotions? Comment below. That's your weak link, and it's where your formula begins. Let's build this step by step. Step 1. The psychological reset. Accept chaos. Reject control. Every trader begins with the illusion of mastery. Livermore learned to replace control with readiness. Before each session, he didn't ask, what will happen? He asked, am I emotionally neutral enough to observe clearly? Modern traders should do the same. Start each day with a mental calibration. Am I chasing revenge from yesterday? Am I trading to prove, or to align? Am I clear enough to listen to the market instead of trying to teach it a lesson? If the answer is no, you're already off balance. The formula doesn't function in emotional noise. Step 2. Identify the emotional extremes. Measure mood, not metrics. Livermore didn't use oscillators or Fibonacci lines. He used crowd psychology. You can do the same, just in a modern context. Track social sentiment, volatility spikes, option skews, but treat them as emotion detectors, not trading signals. Look for moments when the narrative becomes unanimous. When everyone agrees, the next move is reversal. Ask yourself, is the crowd desperate for certainty? Are analysts rewriting history to justify a rally or a crash? Do the charts feel too obvious? That's the emotional tipping point. Livermore's favorite hunting ground. Step 3. Build the Livermore pyramid position. Scaling with patience. Livermore's method of pyramiding wasn't just about adding size. It was about proving the market right one step at a time. He'd start small, let the market confirm his thesis, then scale gradually, each add reinforcing the equation, never contradicting it. In modern practice, start with a pilot position. Wait for follow-through. Add only when price validates your logic. Never average down a losing position. Livermore called it throwing good money after bad thinking. Step 4. The discipline of cutting clean. The loss as feedback. Livermore's formula depended on one unbreakable rule. Small losses are tuition. He viewed every stop-out as information. The market wasn't punishing him, it was correcting him. You can mimic this by treating losses as diagnostics, not failures. Each loss answers a question. Was I early or wrong? Did I trade my system or my emotion? What was I attached to, the setup or my ego? Document these answers. Over time, your trading journal becomes your real P&L. Patience and learning. Step 5. Sit tight. The master's discipline here is where most traders fail. They can cut losses, but they can't hold winners. Livermore's magic came from endurance, letting profits mature while the crowd panicked in and out. To do this, define your target not as a price but as an emotional state. Ask, when will the crowd feel the opposite emotion from when I entered? That's usually when your edge has completed its cycle. Until then, stay seated. Livermore called it the sitting that makes the money. Step 6. Detachment. The Livermore mindset loop. After each session, Livermore detached completely, mentally, emotionally, physically. He believed overthinking between trades corrupted intuition. Modern traders should build this into their process. End-of-day reflection, not reaction. No revenge trades. Disconnect from the screen to reconnect with clarity. Remember, the formula works only when the mind is rested enough to read emotion objectively. Step 7. Continuous calibration. The never-ending equation. Livermore didn't trust consistency, he trained it. He viewed every cycle as rehearsal for humility. Each win, each loss, was input into the same psychological formula. Emotion plus pattern. Recognition times self-control equals edge. The moment he forgot that when he let success breed entitlement, the equation broke. So should you. When you win, review how calm you were. When you lose, review how fast you reacted. Over time, that awareness becomes your algorithm, a self-balancing model that no computer can replicate. Livermore's formula, when fully internalized, turns you into both trader and observer, a part of the market, yet detached from its hysteria. You become a reader of rhythm, a student of repetition, and every trade, win or lose, becomes data in your psychological ledger. That's how the myth becomes method, not through brilliance, but through balance. Every trader searches for the secret formula, the magic signal, the hidden pattern, the perfect algorithm. But Livermore found something greater. He discovered that the formula was never in the market. It was in us. Comment hook. What's your takeaway from Livermore's philosophy? Has this changed how you see your own trading mindset? Drop your reflections below. I read every one. Let me take you back to the end of his journey. Livermore sat alone in a quiet hotel suite, years after he'd made and lost fortunes that would make today's billionaires blush. No screens, no algorithms, just silence, memory, and reflection. He'd spent his life decoding the market's rhythm, and what he found was hauntingly poetic. The game taught me the game, and it didn't spare the rod while teaching. That's not regret, that's reverence. He realized that the market isn't chaos. It's a mirror that reflects back every flaw, fear, and fantasy a trader brings to it. Every loss is your impatience made visible. Every premature exit is your doubt quantified. Every great trade is your clarity rewarded. Livermore's lost formula. The hidden equation behind every winning trade wasn't a secret code. It was the mathematics of emotion. He cracked it. He lived it. And he paid for it with everything. If we translate his entire philosophy into one simple, timeless law, it's this: a trader's greatest edge is his ability to remain emotionally asymmetrical, calm when others panic, decisive when others freeze. That's the equation behind every legendary move. The ability to see clearly while everyone else drowns in their own reflection. In our world today, the crowd is louder, faster, more connected, yet no wiser. The same impulses Livermore fought in himself now spread through millions of traders in milliseconds. FOMO has become automated. Greed has gone viral. But so has the opportunity to rise above it, because the formula still applies. Patience times clarity divided by emotion equals edge. If you internalize that not as knowledge, but as behavior, you become something rare. You stop being a participant in the market's chaos and start becoming an interpreter of its psychology. You trade less, but you see more. You act slower, but with precision. You lose smaller, and win cleaner. Livermore once said, "There is nothing new on Wall Street." There can't be, because speculation is as old as the hills. And that's the ultimate truth. Technology changes, but human nature doesn't. And so long as fear and greed exist, Livermore's formula will never die. So here's your choice. Standing at the edge of this cinematic story, you can chase 1,000 indicators, or master one truth, your own mind. The greatest traders aren't the fastest or the smartest, they're the calmest. They've learned to let the market breathe, to see it not as a battle to win, but a rhythm to join to. If you've ever felt the chaos of doubt, the sting of or the temptation to chase, remember Livermore's lesson. You don't need to predict the market. You need to outlast your own emotion. Every candle is a heartbeat. Every trade, a reflection. Every win, a whisper from the market saying, "You're finally listening." Cinematic sign-off. The market isn't random. It's recursive, a living equation that measures how well we master ourselves. And in that equation, the solution isn't in finding the perfect trade. It's in becoming the trader who no longer needs to. So ask yourself, right now, what's your equation? What are the variables you still haven't balanced? Leave your thoughts in the comments. Your insight might just be the missing line in someone else's formula. Because, in the end, as Livermore proved through every fortune and failure, the market doesn't reward prediction. It rewards evolution. After the panic of 1907, Livermore became a legend. His name echoed through Wall Street like myth. He had outsmarted panic, timed the bottom, and made millions when everyone else was drowning. But what the crowd didn't see was the silence that followed. When the ticker tape stopped printing, when the market cooled, there was nothing left to conquer. Only the echo of his own thoughts. The same detachment that had made him rich was now devouring him. He began to see that his method, his beautiful, ruthless equation, required him to be more machine than man. To trade like Livermore, you had to feel everything and believe nothing. To see the crowd clearly, you had to stand apart from it. But isolation, over time, becomes its own form of blindness. Livermore once said, "There is nothing like losing all you have in the world for teaching you what not to do." And he knew that lesson too well. Because after every fortune he found a way to lose it again, not through ignorance, but through repetition of emotion. He would rise with precision, fall with conviction, rise again with greater wisdom, and still fall once more. Each loss wasn't random. It was cyclical. He was trapped in the same pattern he had spent a lifetime decoding in others. The equation was haunting him. Emotion gives insight, gives success, gives euphoria, gives blindness, gives collapse, gives renewal. It was the same cycle he exploited in markets, now playing out in his own life. Here's the cruel symmetry of speculation. You study human behavior to profit from it, but eventually you realize you're studying your own. Every mistake you see in the crowd, impatience, fear, arrogance, revenge, exists in you, waiting for the right trade to activate it. And Livermore wasn't immune. He tried to systematize discipline, to turn emotion into arithmetic, but even he couldn't escape himself. The man who had mastered crowd psychology couldn't always master his own solitude at his core. He was driven not by greed but by the need to prove understanding. He wasn't chasing money, he was chasing clarity. He wanted to solve the market like an equation with one final answer. But the market doesn't end. It loops. It reinvents the test. So the deeper he dove, the more the formula seemed to dissolve. By the late 1920s, Livermore made his greatest fortune shorting the 1929 crash, an unimaginable $100 million in today's money. He was richer than kings, but inside, he was hollow. He once confessed to a friend, "It's not the money I care for, it's the game." And that's the tragedy, because when the game became all he cared for, he lost the very thing that gave it meaning. Every trade, every victory, it became a desperate search for the same spark that had once made him feel alive. But the more he won, the less he felt. This is the psychological load that every serious trader touches, even if they don't speak of it. The realization that markets don't care about your success. They reflect you, and once you master that reflection, it ceases to reward you emotionally. Livermore's story darkens here. After multiple bankruptcies, strained relationships, and decades of cyclical triumph and collapse, he began to withdraw from everything except the market. He tried to codify his system, writing how to trade in stocks, his attempt to translate instinct into structure. But even that wasn't enough. The rhythm that had once made him invincible now felt like noise. His genius became his prison, because when you've seen through the illusion, when you know that every price move is just emotion repeating itself, the thrill disappears. That's the same emptiness that consumes great chess players or war generals who've fought too many battles. The enemy becomes predictable, and victory loses its meaning. And yet, buried within that despair was the seed of his greatest insight, the final piece of the formula he never fully articulated, that the equation is never external. It was never about prices, signals, or even other traders. It was about the constant reconciliation between ego and awareness, because in the end, every winning trade, every truly masterful decision is born not from control, but from surrender. After decades of conquering and being conquered by the market, Jesse Livermore came to one final realization. The market is never your opponent. Your reactions are. That was his ultimate rule, the one he didn't write in a book, but carved into every rise and fall of his life. The key to every winning trade is sitting still when you are right, and cutting clean when you are wrong. It sounds simple, but it's the hardest rule in speculation because it demands mastery over the very thing most traders never tame themselves. Comment hook. When was the last time you broke your own rule, knowing it would cost you but you couldn't stop? Be honest in the comments. Every trader's been there. Livermore's lost formula wasn't about prediction, it was about alignment. He realized that markets reward the trader who can remain psychologically balanced while everyone else loses equilibrium. In other words, his secret wasn't timing or information. It was emotional geometry, the ability to maintain symmetry between patience and aggression, belief and doubt. He framed it in one of his timeless lines. It never was my thinking that made the big money for me. It always was my sitting. That sentence, quiet, almost humble, carries the weight of all his pain. Because sitting isn't passive. It's an act of supreme discipline. It's enduring uncertainty while your instincts scream to act. It's refusing to satisfy your ego with action when the equation demands silence. That was his final evolution, to stop trading for validation and start trading for synchronization with the rhythm of the market, not against it. Livermore learned that the real edge doesn't come from knowing, it comes from waiting. He used to say that the market gives you maybe 2 or 3 truly great opportunities a year. The rest is noise, designed to destroy your focus, and he was right. Most traders die by overtrading, by trying to force clarity where none exists. Livermore compared this to trying to pick up nickels in front of a steamroller. You can win a dozen small battles and still lose the war. So his rule became a paradoxical kind of patience. Wait until the emotional extremes, the points where the crowd is most wrong, and then act decisively, without hesitation or doubt. The formula, when simplified, became this: clarity times timing times conviction, divided by emotion equals profit. But notice, emotion isn't eliminated, it's divided, controlled, because Livermore understood that emotion is energy. The goal isn't to suppress it, it's to channel it. Fear becomes caution, greed becomes focus, doubt becomes discipline. He once said, the human side of every person is the greatest enemy of the average investor or speculator. But he didn't mean to destroy that human side, he meant to educate it. Livermore's genius was emotional arithmetic. He converted feelings into signals. When he felt the urge to chase, he waited. When he felt doubt after a winning streak, he tightened control. When the crowd mocked his detachment, he doubled down on silence. He wasn't trading stocks, he was trading emotional velocity. And that is why his lessons outlived him, because human emotion hasn't changed in 100 years, and it never will. There's something almost spiritual in that realization. Livermore came to see the market as a living organism, not malicious, not benevolent, just pure truth in motion. It doesn't deceive. It reveals the impatience of the crowd, the fear of individuals, the hidden tremors in collective confidence. He stopped trying to predict what the market should do and started aligning with what it was doing. He called it listening to the tape. Today we call it reading price action. Different language, same psychology. But this breakthrough didn't make Livermore invincible. It made him aware that the market is a teacher that never graduates its students, that every cycle resets the test, and that no formula, no matter how profound, can save you from your own humanity. Only discipline can. His final writings echo that truth. He warned that a trader who seeks excitement will always find losses, but a trader who seeks understanding will find peace, even in uncertainty. And that's the paradoxical beauty of Livermore's final rule. Mastery isn't in control, it's in surrender. Not surrender to chaos, but surrender to rhythm. When you stop trying to beat the market and start moving with it, you realize the truth Livermore chased his whole life, that every winning trade is simply a moment of perfect emotional balance. We think the market has evolved faster charts, smarter tools, endless data, but the truth, the battlefield is the same. The weapons change, The psychology did in single quotes T. Behind every candlestick still beats the same pulse. Livermore felt under his fingertips in 1907 fear, greed, hope, denial. Comment hook. What's the one emotion that sabotages your trades most often, fear or greed? Type it below. It's the first step toward naming your own enemy. Today's trader faces a new illusion. The illusion of precision. Screens flicker with indicators, AI models, backlists, and sentiment scores, all claiming to reduce uncertainty to a decimal. But Livermore would smirk at that confidence. He knew that no amount of data erases the equation of human emotion. Because the market is not a problem to be solved, it's a mirror to be read. He'd say you're not trading technology, you're trading people hiding behind technology. Every time a retail trader panic sells, a quant model records it as volatility. Every time an influencer screams to the moon, algorithms echo it as momentum. Different century, same crowd. Livermore's rule: sit still when you're right, cut quick when you're wrong, might sound primitive in an age of high-frequency trading. Like a dancer with the rhythm of uncertainty. You don't lead, you respond. Here's the truth most don't want to hear. You can't control the outcome of a single trade. You can only control your behavior within that uncertainty. That's it. That's the entire battlefield. Once you grasp that, you stop trying to predict the next candle and start focusing on your own reactions. You begin to understand that consistency isn't built on prediction, it's built on emotional control. That's when you finally step out of the illusion, and the formula starts revealing itself. Because what Livermore discovered wasn't about predicting price, it was about predicting yourself. He used to observe that the market moves in waves, not just of price, but of psychology. Fear creates bottoms, confidence builds tops, hope forms traps. If you watch closely enough, not at the chart, but at your own emotions, you start to see the same rhythm repeating. The market's mathematics is just human behavior expressed in numbers. That's the lost formula, not technical, but psychological. And the moment you believe you've mastered it, the market changes again, reminding you that mastery is temporary, humility eternal. Asterisk. Jesse Livermore didn't see markets. He saw moods. Where others saw prices, he saw people. Where they saw noise, he saw rhythm. That was his genius and his curse. He wasn't predicting numbers. He was translating human emotion into probability. Comment hook. What do you think drives the market more, logic or emotion? Comment your side below, and let's see how many still believe reason rules the crowd. Livermore once said, "The market is never wrong. Opinions often are." At first glance, it sounds like a cliché, but underneath it lies his core philosophy. The market doesn't owe you logic. It only reflects behavior, yours and everyone else's. He didn't need to understand why people were buying or selling. He only needed to recognize that they were. This distinction seems small, but it changes everything. Because when you stop asking why and start observing what, you stop fighting the market's movement and start moving with it. Livermore's lost formula wasn't algebra. It was awareness. It was the understanding that human nature moves in predictable cycles of greed, fear, relief, and regret, and that the tape, that endless stream of numbers, was merely the emotional heartbeat of the collective crowd. He treated every price movement as a psychological statement. When volume surged, he heard anxiety. When prices drifted slowly upward, he sensed hesitation. When markets exploded on no news, he smelled desperation. He once described his method this way: a stock is never too high to begin buying, or too low to begin selling, if the tape tells you so. That wasn't recklessness. It was intuition born from immersion. He understood that the market doesn't telegraph intent. It whispers emotion. And the trader who listens not with logic, but with empathy begins to anticipate movement before others see it. Livermore wasn't trading charts. He was trading people's pain thresholds. Here's the brilliance most traders miss. Livermore's formula didn't calculate price direction, it calculated emotional imbalance. He looked for those moments when the market was most emotionally lopsided, when everyone believed the same story. Because he knew that when the crowd agrees, the move is nearly over. Think about that. The moment your conviction feels safest is usually when you're standing closest to danger. Livermore's life was a cycle of learning this truth again and again. He'd make millions by being early to a turn, shorting euphoric markets, buying despair, only to lose it later when he believed his own brilliance was control. That was his internal battle, and perhaps the real equation behind his success and downfall. Perception, certainty equals insight. To see as Livermore saw, you must strip away your need for answers. You must become a behavioral observer. Ask not, what is the market doing, but what is the crowd feeling? Are traders fearful of missing out? Are they exhausted? Are they in denial? Because those emotions are the missiles, they're the hidden data beneath every candle. Modern traders talk about sentiment indicators and data analytics. But Livermore did it intuitively, through observation and solitude. He watched the tape like a detective studies handwriting. Every twitch, every delay, every burst of volume told a story about collective human belief. But make no mistake, this wasn't mystical. It was brutally rational. He knew that human emotion, when aggregated, becomes pattern. And that pattern, when timed correctly, becomes profit. His philosophy was built on this foundation. The market is never wrong, it is the sum of all hopes and fears. He didn't try to conquer that sum. He synchronized with it, entering when emotion reached extremes, exiting when logic briefly returned. It was less about prediction and more about rhythm. And in that rhythm, he discovered the closest thing to a formula the market has ever offered, a psychological equation repeating throughout time, hidden behind every bubble and crash. Asterisk, sometimes the market doesn't whisper, it screams. And in 1907, it screamed so loudly that the world thought the financial system itself was collapsing. Banks were failing. Panic ruled the streets of New York. Men stood outside brokerage houses, pale and silent, watching tickers print ruin in real time. And in that madness, one man, Jesse Livermore, stood calm, deliberate, and detached while the world was losing its mind. He was solving an equation invisible to everyone else. Comment book. Imagine standing alone against a crashing market. Would you have had the nerve to short when everyone else was praying for mercy? Comment your honest answer below. The story goes like this. In the spring of 1907, rumors spread that the Knickerbocker Trust Company was insolvent. Confidence cracked like thin ice. Within days, the panic rippled through Wall Street. Prices collapsed, liquidity vanished, and fear became the only currency that mattered. Livermore was already positioned short, not because of luck, but because he had seen the imbalance forming months earlier. He could feel the overconfidence. Bankers were euphoric. Margin loans were exploding. Traders were borrowing to the hilt, convinced the boom was eternal. To Livermore, it was textbook human nature, the final stage of every mania. He once said, "There is nothing new on Wall Street. There can't be, because human nature never changes." He didn't need an economic report to tell him what was coming. He only needed to measure emotion. And when optimism reaches hysteria, the equation flips. Greed becomes fragility. When the panic hit, Livermore didn't celebrate. He waited. He understood that, in crashes, prices move faster than emotion. The crowd sells in waves: denial, panic, capitulation. He added to his short positions methodically, like a surgeon cutting into chaos. And when others begged for intervention, he remained composed. That's the first proof of Livermore's formula. Emotion predicts movement. Discipline controls exposure. He made more than $3 million in that single panic, a staggering fortune for the time. But what mattered more wasn't the profit. It was the psychology. Because while others traded events, Livermore traded responses. He understood that panic wasn't a random breakdown, it was an emotional equation, resolving itself violently. Yet the story doesn't end with triumph. Because even in victory, Livermore faced the other side of the formula. The cost of being right. After the panic, J.P. Morgan himself summoned him. The financial system was on the brink, and Morgan asked Livermore, the very man profiting from the collapse, to use his capital to stabilize prices. Livermore agreed. He began buying back stocks, helping to restore order to the markets. And here's the twist. The moment he did that, the market bottomed. Think about that. The man who shorted hysteria also caught the bottom, not because of indicators, but because of psychology. He could sense the exhaustion of fear. The moment when sellers ran out of courage. That was the hidden equation. Again, greed gives euphoria, gives collapse, gives fear, gives exhaustion, gives recovery. A cycle as old as markets themselves. Livermore didn't just predict prices, he timed emotions. He waited for the moment when sentiment reached its mathematical extreme. He traded the transition points when the crowd's emotional curve bent from greed to fear, from despair to hope. That was his calculus. That wasn't mystical. It was measurable if you could quiet your own emotions long enough to see it. He once said, "The big money is not in the buying or the selling, but in the waiting." That waiting, that patience to let emotion complete its cycle, was the cornerstone of his formula. But there's a darker side to this story. Because when you play at that level of detachment, when you watch humanity panic and profit from it, you start to feel something erode inside you. Livermore wasn't just mastering the market, he was isolating himself from it, becoming an observer of human fear rather than a participant. And in that detachment, new emotion began to take hold. Emptiness. That emptiness would later become his greatest enemy. Asterisk. Every trader thinks they want mastery, until they realize what mastery costs. For Jesse Livermore, the cost wasn't just measured in dollars, it was measured in isolation, obsession, and the slow erosion of peace. Because when you finally understand the market's rhythm, you stop hearing anything else. The market becomes your god, your mirror, your tormentor, and that's when the formula starts turning inward, not predicting others, but exposing you. Comment hook. Have you ever had a trade that made you question yourself more than your strategy? Comment your story below, because that's where real traders are forged. Every winning trade begins long before you click the button. It begins in silence, in that eerie stillness between doubt and conviction, where you start to see what others refuse to see. They call it instinct. Some say it's experience. But Jesse Livermore once hinted that it was something far colder, far more precise. An equation, not written on paper, but etched into the human condition itself, the mathematics of fear and greed. Now, Think about it. If there truly is a hidden equation behind every winning trade, would you have the courage to follow it even when it tells you to do the opposite of what feels right? Comment hook. What would you do in that moment? Obey the formula or your feelings? Comment your instinct below. I remember my first encounter with Livermore's writings, not as a trader, but as a student of human behavior. His words cut sharper than price action. The game taught me the game, and it didn't spare me the rod while teaching. It wasn't about the market's movement. It was about the invisible rhythm inside us, the recurring loop of excitement, hope, fear, and despair repeating like a fractal, mirrored on every chart, in every century. Every bull market breeds its own destruction. Every panic sows the seeds of a rebound. The equation hides in plain sight. Human nature plus time equals market outcome. But human nature refuses to learn from itself. We chase prices because we crave validation. We sell too soon because we crave safety. Livermore's lost formula wasn't a trading strategy. It was a psychological balance sheet. It measured not profit and loss, but belief and discipline. To understand the formula, you have to imagine Livermore not as a legend, but as a man haunted by the market's music. He saw it everywhere, the rhythm of boom and bust, the pulse of speculation. To him, markets were not random. They were a mirror reflecting the collective mood of humanity. He once said, "The market never changes because human nature never changes." That's the essence. That's the hidden constant, the one variable that traders keep ignoring while searching for signals and setups. So, in this journey I'm not going to show you charts or back. I'm going to show you the mental calculus behind the greatest speculator who ever lived and how his invisible formula still governs every trade you make today. We'll dissect the paradox that traps most traders, the emotional geometry of losses, the symmetry of patience and timing, and the final equation that every great trade eventually reduces to: conviction multiplied by timing, divided by ego. Before we dive deeper, remember this: every losing trader thinks they're fighting the market. Every winning trader realizes they're fighting themselves. And that's where our story begins, not on Wall Street, not in a ticker tape, but in the silence between your decisions, because the market's greatest secret isn't in its data, it's in its psychology. And that's the secret Livermore spent a lifetime trying to solve, sometimes winning millions, sometimes losing everything, but always moving closer to understanding the hidden equation behind every winning trade. Asterisk, every trader wants to make money, but the moment you want it too much, the market senses it and takes it away. This is the paradox at the center of Livermore's philosophy. The more emotionally attached you are to your outcome, the less likely you are to reach it. The market punishes neediness. It rewards detachment. And yet, how can you detach from the very thing you're risking your life's energy for? Comment hook. Have you ever noticed that your best trades often happen when you don't care about the outcome? Tell me in the comments, when did detachment make you profitable? There's a reason Jesse Livermore called speculation the most fascinating game in the world. He wasn't talking about excitement, he was talking about contradiction. Trading is a game that demands absolute commitment, and yet, it destroys those who cling too tightly. It requires belief but annihilates arrogance. It's a paradox in motion, a psychological test disguised as a financial pursuit. I remember sitting in front of the screen one morning, watching price move against me tick by tick. My analysis was right. The market was wrong, or so I thought. Then it hit me. I wasn't trading the market. I was trading my opinion. And in that moment, I understood Livermore's most haunting truth. A man must believe in himself and his judgment if he expects to make a living at this game. But he must not believe blindly. Blind belief, that's the paradox's poison. Most traders fail not because they lack skill, but because they crave confirmation. They enter trades looking for the market to validate their intellect, their conviction, but the market doesn't care about you. It doesn't care if you're a genius, a fool, or a saint. It moves according to collective psychology, a tide of emotions that no one can control. The paradox is this: to win, you must be confident enough to act alone, yet humble enough to know you might be wrong. To profit, you must risk what you can't control, yet manage what you can: your emotions, your position size, your reaction. The formula begins with this internal equation: confidence, ego, discipline times detachment equals survival. Livermore lived by that calculation. Though it often broke him before it made him, he knew that markets were not machines but mirrors. When he was calm, he saw clearly. When he was desperate, he saw distortion. Let me tell you something most traders never admit. They think they lose money because of a bad setup or poor timing. But deep down, every loss starts as an emotional compromise, a refusal to accept uncertainty, a need to be right, a small rebellion against the reality that the market is bigger than you. Livermore faced that same rebellion during his early years. When he made and lost fortunes on cotton and stocks, he began to realize that being right too early feels exactly the same as being wrong. That's the cruel symmetry of the market. It doesn't reward truth, only timing. And here's where the paradox tightens its grip. The more experience you gain, the more dangerous you become, not to others, but to yourself. Knowledge gives you confidence, but confidence without restraint creates overexposure. Livermore knew this intimately. He once said, After a man makes money in the market, he feels he knows something, but it's what he doesn't know that usually gets him into trouble. That's the hidden variable, the silent thread inside the equation of every winning trade. To master this paradox, you have to embrace a strange truth. The goal isn't to control the market, it's to control your perception of it. When you can detach your ego from your analysis, when you can hold conviction without attachment, you finally step out of the emotional loop that ruins most traders. Only then can you see what Livermore saw, that the market's chaos hides a recurring logic, an emotional calculus disguised as price movement. The market is a mirror, but most traders stare into it and mistake their reflection for truth. That's the trap, the illusion that you can control what happens next. You run the numbers, study the charts, read the headlines, and you think you're prepared. But the moment you believe that preparation equals control, the market humbles you. Because in Livermore's world, control was the most dangerous illusion of all. Comment hook. Be honest, how many times have you broken your own trading rule just to make the trade work? Share your confessions in the comments. Every trader at some point becomes a puppet to their own mind. We analyze, predict, and plan because we crave certainty. The mind despises randomness. It wants patterns, symmetry, predictability. But the market thrives on uncertainty. It feeds on our attempts to make it logical. That's why every losing streak feels personal. Because deep down, the loss isn't just financial, it's psychological. It's your brain rebelling against chaos and losing the fight. Livermore understood this better than anyone. He used to say, speculation is not a business for the man who wants to be always right. He wasn't dismissing analysis. He was warning us. Your intelligence can betray you. The more you know, the more your brain searches for confirmation, for proof that your ideas are right. And that's the trap. The moment you start trading your beliefs instead of the tape, you've stopped trading the market and started trading your own bias. I remember one of my worst trading days, a perfect setup on paper. All the indicators aligned. News was in my favor. The market opened exactly where I predicted. But it stalled. It hesitated. It whispered uncertainty. I refused to listen. I had already built the narrative in my mind. This trade had to work. When the price turned against me, I didn't cut it. I added. That's the mind's hidden equation. Ego times hope equals disaster. Livermore called this fighting the tape, a battle no trader ever wins. He used to say that the tape tells the truth long before you're ready to accept it. And when you ignore it, you're not disobeying a chart, you're defying reality. This illusion of control is subtle, because it disguises itself as discipline. You think you're being patient, when you're actually being stubborn. You think you're sticking to your plan, when in truth you're refusing to surrender your bias. It's the same mindset that turns traders into martyrs dying. On the hill of their own analysis, Livermore's downfall and his genius were rooted in this paradox. He was the master of timing, the greatest tape reader of his age, and yet, even he wasn't immune. He once admitted that his greatest losses came not from ignorance, but from conviction unchecked by humility. He learned that the market isn't something you conquer, it's something you synchronize with.